How's it going, guys? My name is Jared and welcome back to MoneyMetEish. This is the November EasyEquities portfolio review where we will have a look at the different accounts that make up the portfolio, and I will go over a few changes that I have made or I plan to make to the portfolio in the near future. Speaking of changes, unfortunately due to some unforeseen technical challenges with their platform, Tenacity Leather Studio will be postponing their launch of their online store until the 1st of December. If you have already registered on the pre-launch mailing list, unfortunately you will have to wait a few extra days before purchasing your very own exquisitely designed and crafted full-grain leather products like this wallet, or this notebook cover, or this beautiful desk pad. If, however, you have not yet registered, take this as a sign. You are being given another chance to sign up for the mailing list and claim your mystery discount between 10 and 30% off your first purchase. Don't let this opportunity slip by twice. To register for the mailing list or to check out their line of truly exquisite full-grain leather products sourced from one of South Africa's oldest tanneries, follow the link in the description below. And while you're down there, don't forget to hit the like button and subscribe to MoneyMetEish and ring the bell to be notified every time we upload a new video. Please also remember that my videos are meant for edutainment purposes only and should not be used as the basis for any investment or financial decisions, as I am not a financial advisor, this is not financial advice, and this is not a blank cup. All investments carry the risk of loss, and you should always do your own research and due diligence, including consulting a registered financial service provider before making investment decisions. The MoneyMetEish EasyEquities portfolio saw an overall value gain of 7.25% in November, meaning it has grown by 7% for the last 2 consecutive months, and would actually have grown a lot more in November had this final week not been so devastating, but more on that later. The total portfolio value is currently sitting at 91,271 Rand and 11 cents, and that is 13,611 Rand and 11 cents higher than the closing value at the end of October. And even though we contributed 8,500 Rand this month, since our intercontinental banking bureaucracy BS finally sorted itself out, the portfolio grew profits from 10,932 Rand to 16,043 Rand, a gain of 5,111 Rand in a month, roughly a third of the previous total. Now, let's have a look at each one of these accounts to see how they performed this month, starting as always with the USA account. The USA account saw an overall gain of 2.12% in November, but there were some serious movers in the account. Nvidia, Tesla, McDonald's, Costco, and Cloudflare were all up over 5%. However, their gains were countered by Altria, down 9%, and Jumia down a mind-numbing 28.88%. The winner by far was Nvidia, gaining 28.33% in the month. However, it made a little difference to the total account value, other than offsetting the massive losses by Jumia, who, losing 28.88%, was our runaway loser. Good job! With the two basically cancelling each other out for a net loss of 0.55%. With Jumia having fallen so fast after their earnings report, I've decided that I will just hold on to the shares in the meantime, and I will buy in again if the share price continues to fall below $10, where I will be able to greatly reduce my average purchase price and benefit from any smaller share movements from the lower base, as I really don't see this share getting to $60 anytime soon, especially considering the factors we'll bring up a little bit later. The 2.12% increase came in tandem with a weakening in the rand, which increased the value of our overall US holdings even further, and that is actually very nice. Thank you very much. Now, let's have a look at the ZAR account. The ZAR account is down 5.35% at the end of November, and the account was actually sitting in a gain of over 6% on Monday. However, the new variant of COVID-19 led to an 11% collapse in the shares that make up this portfolio on Friday, leaving us where we are now, 5% in the hole. The account has also seen the biggest changes in this month. Since we maxed out the tax-free savings account, I have decided to increase the crypto holdings to 2% of the total portfolio value, and at the end of this month it's currently sitting at 1%, as well as purchase the main ETFs in the tax-free savings account in our ZAR account as well, and start building up a 5% cash reserve to be able to deploy when we come across great buying opportunities. The winner for this account is Purple Group, coming out with some really nice numbers during the month, and you can check out our deep dive into the company right here. While the loser for the second month in a row is Spar. Despite some great looking numbers out of Switzerland and Ireland, the company is still struggling to get a handle on their Polish business. That being said, it has been an abnormal operating environment, blah blah, COVID, blah blah blah. I haven't had a chance to fully go through the numbers yet, so I'm unable to comment too much, but the share is currently down 16.71%. Now, onto the account that holds 2/3 of our total portfolio value, the tax-free savings account. Our tax-free savings account has really been the star of the show this month, and it is a little surprising since this month we contributed the least to this account. I mean, whoever said that ETFs were boring was clearly mistaken. We have seen some massive numbers over the last month from some of the holdings in this account, and it's the only account that didn't see any of its holdings end the month negative. The winner for our tax-free savings account for November was the Satrix Nasdaq 100, which saw a gain of 12.66% this month, making it not only the #1 fund in the tax-free savings account, but also third overall in our overall portfolio. And just to put this number into some context, that is only 1.3% lower than the gain made by the same fund over the entire year between November 2017 and November 2018. This has really been a month for our ETFs, with both the Satrix Nasdaq 100 and the Signia S&P 500 outperforming Tesla this month. And it's a strange comparison, but I'm going to run with it anyway. Tesla grew by 8.43% this month, while the Signia S&P 500 and the Satrix Nasdaq 100 grew by 9.95% and 12.66% respectively. These are massive numbers for an index fund. The loser for the month was once again the MSCI Taiwan, which only grew by 1.01% this month, although compared to this last week, a 1.01% gain seems pretty massive. So what made this week so bad? Well, a few factors, starting with the threats of inflation and interest rate hikes, combined with the ongoing chip shortage, and ending on the new COVID variant, which once again has the market in a tiz. I'm a little cautious about what will happen in the US in the coming months, with the Federal Reserve beginning to taper its bond purchasing program, aka slow down the money printers, which have been keeping the market inflated for over a year now. Tapering is going to happen. The Federal Reserve have stated its intention to raise interest rates. The only question now is when will it happen and how aggressively will they taper their spending? Or in other words, how much are they going to raise interest rates and how quickly will they do it? With initial suggestions being that the Fed will reduce its purchases by $15 billion every month, which gives us about 8 months before they shut off the taps completely. A rising interest rate is bad for the stock market in general because it means that bonds become more attractive as they begin to offer higher guaranteed returns at a much lower risk than the equities market, leading to a lot of investors opting to pull their funds out of the equities market as they seek safer returns. Thus, there is less liquidity and an overall lower risk tolerance in the equities or stock market. It also has an impact on companies, mostly high growth or speculative tech companies, whose expected earnings or profits are far out into the future. The increase in interest rates leads to an increase in the discount rate on the future earnings those companies are expected to generate. A higher discount means that those future earnings are worth much less today, and this has an effect of lowering the valuation of those companies. We can do another full video on this if you'd like. Let me know in the comments down below, since the South African Reserve Bank has also started to increase interest rates. Increasing interest rates is important to fight inflation, and it is necessary for central banks to do so. To see what happens when you don't raise interest rates in time, check out what happened to the Turkish lira over the past week. I expect there to be quite a lot of market weakness over the next 6 to 12 months, especially compared to the massive bull run we have been seeing as the interest rates around the world slowly pick up. As MoneyMetEish, we will be building up our cash reserves just in case. It's something that we should have had for a long time, but didn't feel the need for, since our tax-free savings account will always remain 100% invested. I'm also looking to reduce the number of holdings in the portfolio, but it is taking longer than anticipated to look at all the companies. And that's probably another sign why it's a good idea for us to cut down on the companies we hold. This could be an awesome buying opportunity as prices fall, and I would recommend looking into investing in a high interest rate environment just to be well prepared. Once again, not financial advice, not a financial advisor, not a blank cup. Just like we are preparing to grab any good investment opportunity that comes our way, don't forget to grab your second chance to register for the Tenacity Leather Studio pre-launch mailing list, link down below. Thank you for watching, guys. If you liked the video, please give it a like, share it with everybody you know, and I mean literally everybody you know, and subscribe to see more of our content. You can also follow MoneyMetEish on Instagram and Facebook and everywhere where MoneyMetEishes are. Thank you and good night.